Hello, and welcome. In this video, we'll be breaking down the important changes to related party disclosures introduced by the Financial Reporting Council's FRS 82 draft, which have now been confirmed in the Periodic Review 2024 amendments. These updates affect anyone preparing accounts under FRS 102, particularly small businesses. We'll cover what's changed for the full FRS 102, the major shift for small entities under Section 1A, and the impact on microentities using FRS 105. So what are the headline changes? For entities applying the full FRS 102 standard, the key update is the explicit requirement to disclose commitments alongside other transactions. The biggest operational change, however, is for UK small entities. The subjective and often difficult normal market conditions test has been completely removed. We'll dive into what that means shortly. Finally, for the smallest businesses using FRS 105, the impact is minimal, and we'll explain why. First, let's look at the full FRS 102 standard. The main change here is about widening the net of what needs to be disclosed. It's no longer just about transactions that have already happened. The rules now explicitly state that you must also disclose, quote, commitments. This means a future promise to do something with a related party could now be disclosable. The update also clarified the intragroup exemption. While you don't need to list every transaction between a parent and its wholly owned subsidiary, you still must disclose that the controlling relationship exists. You might be wondering, what exactly counts as a commitment? The standard gives a helpful, if broad, example. It's a, quote, commitment to do something if a particular event occurs or does not occur in the future. Think of it as a conditional promise. This could be a financial guarantee you've provided for a director's loan, a pledge to buy an asset from a related party in the future, or an agreement to fund another of their business ventures. If it's a binding commitment with a related party, it now needs to be considered for disclosure. Now for the biggest change, which affects UK small companies applying Section 1A. The old rule was a headache for many. You had to identify all related party transactions and then make a significant judgment. Was this transaction done on an arm's-length basis, under normal market conditions? This was subjective and hard to prove. The FRC recognized this was burdensome, so they've scrapped it. The new rule is simple. You must now disclose all related party transactions, regardless of the terms. So what exactly do UK small companies need to disclose under this new rule? You'll need to provide the amount of the transactions, describe the nature of the relationship, for example, a transaction with a director, and detail any outstanding balances or commitments. You can group similar transactions together, unless breaking them out is necessary for understanding their effect. Crucially, there's one key piece of information you don't have to disclose: the total compensation paid to your key management personnel. That requirement is for larger entities only. It's important to note that this major change only applies to UK small entities. For small companies in Ireland applying Section 1A, the rules remain the same. They will continue to use the, quote, normal market conditions test and only need to disclose material transactions that fall outside of that definition. This creates a divergence in reporting between the UK and Ireland for the first time in this area. Finally, let's touch on micro-entities, those applying FRS 105. If this is you, the simple answer is that nothing has changed. The disclosure rules for micro-entities are strictly defined in the Companies Act, and the Financial Reporting Council doesn't have the power to alter them. So, for related party notes, it's business as usual. To summarize the key takeaways from these 2024 amendments, if you use the full FRS 102, your main new task is to consider commitments. If you are a UK small entity, the workload may have changed significantly. You no longer need to make difficult judgments, but you will need to list all related party transactions. For Irish small entities and micro-entities, your requirements for related party notes have not changed. Be sure to check the effective date for these amendments and ensure your systems are ready to capture the necessary information. Thank you for watching this breakdown of the FRS 82 amendments to related party disclosures. We hope you found it useful. If you did, please consider liking this video and subscribing to the channel for more clear and concise updates on the world of financial reporting. See you next time.